Of course, the South African economy has also taken a hit, along with the rest of the world, from the coronavirus outbreak. Global markets have also borne the brunt of the spread of the infection and, of course, the oil price spat between Russia and Saudi Arabia. Well, I'm joined by Gary Booysen, market analyst, to tell us more. Good morning to you, Gary. What a week it has been. Bloodbath on Monday and then wild swings yesterday. Same for the JSE?
No, the JSE is largely tracking international markets. So, obviously Monday they're already calling it a crash. So technically we just missed entering into bear market territory in the overseas markets. I think the Dow was about 65 points from the 20% correction, and that's the technical definition of a bear market. But certainly it's been called Black Monday, and this is a significant crash. Obviously it fed into the local market certainly, and we did see some sort of rebound yesterday. Really, just towards the US close, we saw futures ending. At least we saw US markets ending about 5% positive, but we've got Asia on the back foot again, so it looks like we're not out of the woods just yet. And
of course there's that oil price fight going on between Russia and Saudi Arabia, and that could have almost more serious implications, am I right?
Absolutely. So everyone's kind of looking at the coronavirus and saying that this is really the reason for the initial panic, but the actual drop on Monday was largely, as you say, more based on the fall in the oil price, fall in commodity prices, as Saudi Arabia and Russia tried to come to some sort of agreement about where to set output on oil. The problem is that we're facing a world where oil is not as important as it used to be. There's a finite amount of oil demand as we move to electric vehicles. Saudi Arabia is obviously sitting on a lot of oil under the ground, and they're looking at the situation at the moment and saying, well, we actually are going to eventually enter a world where potentially we won't ever extract all of these reserves. So they can quite comfortably, pump a lot more. People are calling it the breakup of the OPEC cartel, which is, it's potentially a little bit extreme, because we do know, even though Saudi does pump oil at probably about $14 a barrel, so they are still essentially profitable at this stage. Just to fund their state expenditure program, they need around $80 a barrel oil. So it does look like a temporary measure. That said, international oil analysts are very, very bearish on the longer-term outlook for oil. So they're saying that this kind of $37 a barrel between, say, $30 and $45 a barrel, which essentially puts US shale out of business. It puts certainly countries like Nigeria, countries like Venezuela under an enormous amount of pressure. But they're saying that we could be potentially in a slump for a little bit longer than people are expecting.
What does that mean for us here? Does that mean that our petrol price could come down? And we think, yay, that's great news, but we still have to import the oil, and our rand is under pressure.
Absolutely. So when you look at the macro context, we've already had central banks starting to cut interest rates. We've had Donald Trump yesterday announcing that there would be a wide fiscal stimulus program in the US, cutting taxes, spending programs as well. All of that should hopefully support the global economy and should make emerging markets a little bit more attractive. So we hope that our currency does strengthen. That's it. If the oil price does stay low, we're an oil importer, and that will act as a stimulus for our economy as well. Obviously, the transport of goods and services suddenly becomes a lot cheaper. We've obviously got enormous power problems in South Africa. Running diesel generators becomes cheaper as well. So there is an upside for the South African economy, and it acts almost as a tax cut for an economy. So a lower oil price will provide a type of stimulus for us, which is a good news. I've seen estimates. It's still early days with the volatility that we're seeing in markets to try and actually put a number on what the April petrol price cut will be. I've seen estimates of around 65 cents, but that's changing day by day.
Yes, indeed it is. We have heard lots of estimates about recovery time, that global markets might take 6 months. But in the Business Day this morning, it was quite interesting. Alan Pullinger, CEO of First Rand, says South Africa's economy has deteriorated to the point that recovery could take as long as 5 years. Do you agree with him?
It's interesting. So you look at First Rand, our banks are very structurally dependent on economic growth in South Africa. And, we have structural problems with our growth as well. So I think it's important to make the distinction between an economy and a financial market. So financial market collapses like we've seen recently, they're generally a leading indicator. So when the financial market collapses, you almost see the poor economic growth coming through behind that. Now, we've had international markets collapse, and international markets on the whole have been very, very strong. Now you're probably going to see international markets dipping off. South Africa has been far weaker. Our market has already been priced down significantly. With international markets crashing, international markets potentially could recover very quickly if you see a quick cure to to the coronavirus, if you see some sort of agreement between the big oil players, international markets can lift very quickly. They've got very low unemployment rates. Economic growth was forecast to be fairly good. It could be a temporary blip, 1 or 2 quarters. Locally, with the international markets now going through a hiccup, I would have to agree with him. I think we're in for a very difficult time, and it's probably going to get worse before it gets better.
And today, what are you expecting on the markets, globally and here at home? More volatility, or do you think things will settle a little?
It's very difficult to tell. So we kind of know that it's these days it seems it's going to be a 5% day. We just don't know which direction.
Oh, my word.
So, yeah, as I said, we've got Asian markets are slightly lower today, in spite of a big rally in the US. I still don't think we're out of the woods. I think there's a lot of news still to flow through, and we haven't yet seen a strong recovery in oil prices. And these kind of big one-day updates like we saw in the US last night, they are very, endemic of a bear market. So I think we could potentially still go down. If you actually look at valuation, especially in the international markets, the US markets are actually still expensive in earnings terms if you compare them to financial crises like 2008, 2002, and 1998.
Well, you're bringing me not great news, but with a smile. Thank you very much, Gary Booysen, market analyst.